index down 7%. The biggest opening fall in the Indian markets being seen today since COVID. IT companies, which earn a significant share of their revenue from the US, have lost 7%. Abhishek Jain, economist, is joining us on the broadcast. Abhishek, what do you make of this bloodbath in the markets today?
Yeah, exactly. It's again a bloodbath, we can say, even we must say, reason being there are a lot of fear in the market. And there are several reasons because we have seen Nasdaq enters in a bear market, and afterwards, globally sell-off situation was there. A lot of pressure on exporter, not even for the exporter of goods, even also for the services. We can see the downtrend, specifically for the IT shares. Those are down by 7%. So it's again a very alarming situation across the globe. And investor really think of and don't panic in this particular market, but those who are really sell the futures are in great trouble. Reason being, they need to square off the agreement and the contract anyhow, and they need to book the loss heavily. And of course, we cannot deny the fear of recession and the inflation worries. Reason being, once the tariff increased, then lot of pressure on the exporter reason because of the low demand and hike of duties. So there globally pressure on every country, and we can witness the China's reciprocal tariff as well, 34%. It's again a very initial stage of the tariff war. So we can think deeply while making any decision in the share market, specifically for the retail investors. Those do not have any option except square of the contract. So it's my view, and we all should be very
Economist, is, in
careful.
fact, is also joining us now on the broadcast. Manish Mishra, how do you view this downfall in the markets today? Was this something that was being expected, or has this come as a big shock for you and other watchers of the market?
So definitely, this was expected basically due to US reciprocal was expected to be, but we should not fear. As far as India is concerned, Indian market is temporarily, it may be temporarily down, but due to domestic consumption, we would be in a stronger position in near future. So, as we already we suggest many times, we should be think like an investor, not like a trader. So we have to be think from the longer perspective. But we have to invest for 2 or 3 year investment horizon. We should not do trading activity in the market. Always the trader would be in the loss at the end of the day.
Professor M.K. Agarwal, economist, is also joining us at this point live. Professor Agarwal, bloodbath in the markets today, markets opening in the red, big fall for Sensex and Nifty. What are your first thoughts?
Well, I think the decline in Sensex and Nifty is relatively much lower as compared to the other Asian markets. And if you are looking at Taiwan, that has shed around 15%. Singapore, Japan, they have shared a very huge share of their gains. So that way, India is in a better position to manage this type of tariff war initiated by USA. And India, moreover, the exposure of India to international market is not as big as these Asian countries. And we are largely depending upon our domestic growth, domestic demand. And that's why we are not as much disturbed as are the other countries because of this trade war. Moreover, if you are looking at the sectors, so very few sectors are exposed. For example, it is the IT sector or it is the automobile sector. These are the few sectors which are largely damaged, or you can say aviation sector. Indirectly they are impacted because if these are reduced, then definitely aviation sector or tourism industry gets hampered. So service sectors, some part of the service sectors are also impacted because of this. So I believe India would be in a position very soon to come out of this crisis. Although there would be some supply chain disturbances, no doubt, and India has to face that type of situation because it has to grow rapidly in the coming period.
All right, stay with us. In fact, we're getting more news coming in this hour. Asian shares have nosedived after the meltdown on Wall Street over US President Donald Trump's tariff hikes and the backlash from Beijing. US futures also signaled further weakness. The future for the S&P 500 lost 2.5%, while that for the Dow Jones Industrial Average shed 2.1%. The futures for Nasdaq lost 3.1%. Meanwhile, Tokyo's Nikkei has lost 225 index has lost nearly 8% shortly after the markets opened. By midday, it was down 6% at 31,758.28. A circuit breaker briefly suspended trading of Topix futures after an earlier sharp fall in US futures. Amongst the biggest losers was Mizuho Financial Group, whose shares sank 11.3%. Mitsubishi UFJ Financial Group stock has also lost 9.9% as investors panicked over how the trade war may affect global economy. Hong Kong's Hang Seng has dropped 9.4% to 20,703.30, while the Shanghai Composite Index lost 6.2% to 3,134.98. South Korea's Kospi has lost 4.1% to 2,363.82, while Australia's S&P and ASX 200 lost 3.8% to 7,377.70, recovering from a loss of more than 6%. Abhishek Jain, economist, continues to be live with us. Abhishek, Asian markets also being affected, taking a cue of the US markets tanking as well.
Sorry, could you please come again?
I'm asking you about other Asian markets which have also tanked.
Yeah, of course. There are a lot of pressure on the Asian market. Reason being the tariff which is imposed by Trump government. Of course, that will really affect the Asian market, and we can see and we can witness the plunge in the market. Taiwan, etc. China even itself into the war and imposed 34% reciprocal tax. But as far as India is concerned, China is again a different thing. Reason being because they are directly into the trade war with the US. 34% reciprocal against that 54%. And US imposed 26% on the India. So as far as consumer base is concerned, as far as our economy is concerned, I think we, being an investor, I should not worry a lot. Reason, our strong base and our strong consumer market, and we have our Made in India policy really will play a vital role in this particular situation. Every country want that they should have consumer base of India. They want to sell in India, and because of the largest consumer power, our economy will sustain always. Definitely, no doubt. In global trade war, India will not be in a trouble situation, but still we can manage over the period of time.
This is Akash Jindal. Please take me in. This is Akash.
Manage over the period of time, but in short term, I personally request all the investors, please be cautious and stay away from the market. It's my call.
Abhishek Jain, economist, in fact, is continuing to be with us. Let me get you in here, Manish Mishra. Manish, now, of course, clearly, it's not just, of course, the Indian markets, but the world markets are being affected by these, tariff wars, of course, obviously taking a cue from the US market. Other Asian markets, including Nikkei and others, are, seeing sharp downfalls today as well.
Yes, basically it's all the effect of the US reciprocal traffic. So if you see the US has imposed reciprocal traffic on all countries, majorly on China, India or any Bangladesh, Vietnam, they had imposed all over across the board basically. Na? So this is the, you can say this is the temporary setback for the whole world. As the whole international trade is basically disturbing. So this is the, you can say, the psychological things is happening as of now.
Professor M.K. Agarwal, let me also draw you in here. Professor M.K. Agarwal, which are the stocks in particular which are tanking, or is it a uniform trend that you're seeing in the markets? And here I'm not just talking about India, but I'm talking about other Asian markets as well.
See, in other Asian countries, the impact is very severe. If you are looking at Taiwan, if you are looking at South Korea, Australia, or including China, the supply chain is disturbed, and moreover, the situation, if you are looking at China, although they have tanked around 7 to 8%, but the problem with them is a very serious type of, spillover effect can be seen, and it would be realized in the next few more days. Why? There is a case of default that China is facing, whatever it has lent to many countries, and what it is doing, for example, in Sri Lanka. Sri Lanka is not able to service its debt that it has done in Hambantota. So what is there? How long it can take over the properties of different countries? Ultimately, there would be a dry situation in China. So China is in a very different situation. And if China is there after, you can say, USA, if China is suffering from such deep blow, Japan is suffering and Taiwan is suffering, now you can imagine the situation that it is leading to. Means global crisis in different form. And if this situation persists for another few days, say for 1 to 2 weeks, and be sure that global recession would be there, and it is going to impact across the sectors, across, you can say, all the stocks, not limited to few. And that's why in India, the only stocks which are going to be impacted are those which are exposed. For one reason, one is the tariff war, and second, that it has to discount is. It is the supply chain behavior that is getting disturbed. For that, such stocks would be impacted adversely. But many of the stocks in India, thankfully, they are having large domestic base. Therefore, they are not going to be impacted, and they will continue to provide support to the overall stock market.
Okay, let me in fact quickly also draw you back in here, Abhishek. Do you expect this volatility to continue throughout this week, or is this something only expected today?
Not at all for today itself. Even according to me, it will continue for almost 15 to 30 days volatility. Afterwards, reason being, even we are expecting expression from the European countries. China has expressed its view by imposing 34% reciprocal taxes, and we can see the Asian market really plung a lot. Everywhere it's again a bloodbath. So, of course, by this particular action of Trump government, almost, I think, for the short term, 1 month, we should be very careful. Even number of countries impacted because of this trade war, and we can expect reaction over the period of time. It will take 15 days, 30 days, but not at all for the 1 day. We need to. But as far as India, as all my colleague M.K. Agarwal sir, everyone, Maniji is saying, as an Indian and Indian government or Indian economy, we should not be worried, but in a short term, we should be very cautious, stay away from the market at least 7 to 15 days.
Manish Mishra, at the end of the day, of course, what kind of advice would you give to the investors currently who may be panicked, who may be spooked by what we've seen on Dalal Street today, and also, of course, in the other world markets as well?
Basically, as far as the Indian investor is concerned, we should not be in the panic. We should not sell the stock in the panic. we should wait for the, as Sheikh told, we should wait for the 15 to 20 days or 30 days month. Basically, we have to see how whole world are reacting on this US tariff, reciprocal tariff. So as the China has so then we will decide ki we have to sell or we have to what should be your strategy. Basically, we should sit on the cash to grab the opportunities. We can do the average also. If you have any fundamentally the stocks are positive or fundamentally the stocks are good as for the Indian economy is concerned or whole world is concerned, we should do the average of your investment.
Yes, Akash Jindal, economist, in fact, is also joining the broadcast now. Akash Jindal, we've seen, of course, a big downfall today in Sensex and Nifty. Are you surprised by this development? Were you expecting it? And what do you attribute it to?
Yeah, Udem, my dear friend, I have waited for around 15 minutes. I hope I'll get time to speak.
Well, I've just been told you've joined now, Akash Jindal.
No, I have been there since the past 12 minutes, my dear friend, and you are a dear friend. So Uday, with your permission, I start. Now, Uday, what happens is, what has been happening is not unexpected, Uday. It's on expected line. You yourself know quite well about the economy. You are a veteran anchor. You know what has been happening. Reciprocal tariffs has impacted the world globally very severely. Now, I used to always predict on all your channels that retaliation could happen. Now, retaliatory tariffs are on. China has imposed retaliatory tariffs and Europe may impose retaliatory tariffs. So today, Uday, something which me and you and other colleagues used to discuss on your channel is now official. Now it's an official trade war. The trade war is already there. Now the world is heading towards recession. Yes, I, Akash Jindal, and my organization, akashjindal.in, can make a statement. Yes, the globe is heading towards recession. Now, as an economy, India is doing quite well. In isolation, India is doing quite well. 9.2% has been our GDP growth for 2023-24. You know, the 2023-24 data has been revised upward. GST collection for the past 3 months, we have already been discussing today, has been very good. Income tax numbers, 16th March 2025, there's a 16% increase. Why would people pay higher income tax? Only if they have higher incomes. So, if as far as India is concerned, the data is quite good. GDP growth, GST numbers, income tax numbers. Prime Minister Modi's team is managing the economy very well. But what is happening globally is impacting us, because the global trade war can impact all the countries. Though the tariffs which have been levied on India have been lesser, we have been levied 26% tariff, which are lesser than China and other countries. Plus, China initially also, they had levied tariff. And in the earlier term of also Donald Trump.
Absolutely. Abhishek, is it mainly the IT stocks which are bearing the brunt of it, or is it something which is uniform to all sector stocks in a way?
No, it's not about only IT sector, but there are again this particular trade war is sector-wise. Impact of bloodbath definitely will hit all the sectors, but yes, we need to see major impact on IT sector, export units, and those sectors, those are not affected from the Trump tariff policy, like pharma sectors. They are even gaining some position. So there are again, tariff is sector-wise. Pharma, agri are exempted from the tariff war as far as India is concerned. So there are no worry, those who are holding position in the pharma shares. But of course, like even in today's news, if you can see, JLR hold the position because of the tariff war, and the Tata Motors shares plunged by almost 10%. So definitely it will hit all the segment, but
okay,
there will be again a different situation,
right,
according to the tariff.
All right. Okay. We'll leave it at that. My thanks to all of our guests for joining us on the broadcast. We've run completely out of time. It's time